Hi there, my name is Roxane Webster.
And I'm Keith Alba.
We are with my home team at Keller Williams Advantage Realty in the Denver metro area.
That's right. That's right. And we're back for yet another Honest Hour.
This is where we give you a spin-free environment, unless, of course, you're in my chair.
That's right. That's right. So we just kind of talk about real estate, economy, things that kind of touch or can affect the real estate industry. And we do it in a no spin type of a manner and kind of give you our thoughts and feelings about what's going on, some of the headlines that are out there. So make sure you jump over to our website or the YouTube page and hit that subscribe so you can, and then hit the bell so that you can get notified when the new ones come out on a weekly basis.
Or you can share it, and you can share it with friends and family who you think will find this content interesting.
That's right. So what's on our agenda for today, Rox?
Boy, everybody is singing about Zillow.
It's been all over my news feed and Facebook. I'm not sure about you, but it's been a popular one. Seeing it on the news, seeing it around. So yeah, it's been a big splash recently, and rightfully so, I think.
An interesting topic because it kind of ties in a lot of the changes that we've been seeing in the home selling market and arena for the past few years, and kind of brings it to a somewhat surprising conclusion. And allows us to speculate. You want to give us a little bit of history here, so those folks who aren't with their eyeballs pinned to real estate news like we are pulled in?
Sure. So I would say, this kind of stems back to maybe about 2-3 years ago, where there was a new business model that kind of popped up in the real estate industry, and it was being referred to as an iBuyer program. I standing for instant, and then buyer obviously being just that. So you have these large corporations, whether it's Open Door, OfferPad, a bunch of different ones that were out there, and they would go in, and their model was, hey, avoid the hassle of listing your house traditionally and having to deal with showings and negotiations and that kind of stuff. Come to us, we'll give you a no hassle offer, basically close in a shorter period of time, and give you what they would consider a fair market value. But really, for the most part, what we were seeing is that initially they were under market value offers, and they go in and do what the industry would refer to as a light rehab. So carpet, paint, maybe minor repairs, things along those lines, and then put the house on the market for a higher price and do a quick flip on the program.
Mm-hmm.
They definitely have certain criteria that they were looking for in regards to the properties that they were buying. They would refer to it as their buy box, meaning if a property fit within this box, then it would be eligible for their program and go along those lines. And so Zillow started a program that they called their Zillow Offers. And then that came crumbling down around them here recently.
Yeah, and there's always been a version of this, right? For this portion of the market has always had somebody to serve it. There is always going to be some number of people who, whether it's an estate sale, whether it's somebody who just doesn't have the wherewithal to fix up the property, who really would be better served by having a fast sale where they don't have to prepare the house to make it look good. It doesn't matter if it needs some lipstick on it, and they're willing to take a reduced profit for doing that. But it has been interesting for the past several years to see whole big business models being built up around it. And we've all been kind of watching with interest to see where it would turn out, because, spoiler alert, they weren't so good at valuing properties.
That's right. That's right. Yeah, it was. So maybe just over a month ago, Zillow did come out and they stated, and citing labor shortages with being able to get contractors in there to do that light rehab, that ultimately they made the determination that they were going to pause the Zillow Offers program through the remainder of 21. That then turned into, right before their earnings call for the publicly traded owners that own Zillow stock. When the CEO came on, he dropped a bomb on the shareholders and basically said, yeah, I know he said that we're putting a pause on it, but that pause is permanent. And so they are shutting down the Zillow Offers program.
And why? What did he say? What was his reasoning?
The biggest reason was they're losing massive amounts of money. The expectation that I saw by the end of the year, they're expecting a loss of $500 million from the house flipping program. Yeah.
$500 million.
500 million. That's a massive error, you know. And the CEO stated in that call that the reason that they're experiencing it is they did not have the ability to accurately predict housing prices moving forward. So they'd buy it at a certain price, expecting, you know, appreciation to be able to basically bail them out, allow that their light rehab to get them a higher price, so that they could make money, you know, on that sale. And ultimately what they figured out, and what we've seen based off of some of the research that they were there, is their acquisition costs were too high. Then they put some more money into it. They put it back on the market. And the market was saying, yeah, we're not willing to pay you that price, Zillow. And so they periodically start doing these price reductions until they got it down to a point where buyers were saying, okay, now you're in a fair price. But that was less than what they acquired it for. Didn't account for their rehab costs that are there, their carry costs, and some of the cost of sale. And across all the markets that they were doing this in, it totals up to 500 million.
$500 million. Unbelievable. Not to gloat, but boy, listening public, maybe the 20, 25 years of experience in selling homes has got a greater value than the market has been giving it recently.
Yeah. I mean, I think, you know, if we're being honest about it, right, there were some sellers that were able to capitalize on Zillow's aggressiveness and got a price that maybe was even higher than what the market would have bared, but Zillow was willing to pay it, right? So they capitalized on that, but that opportunity with Zillow is absolutely gone. And I think the remaining iBuyers that are out there are absolutely going to be learning a lesson from Zillow and making sure that their acquisition prices are a lot different than what Zillow was willing to pay.
Well, and I also think that we've got this kind of market condition where, you know, I don't know into the inner hearts of Zillow or any of these other programs. However, they are attempting to take market share. It is not uncommon at all as a business to be willing to take some losses in order to consume market share so that you can corner larger portions of that market share. And then you've got the flexibility to increase prices. So as you and I have been doing some fairly regular research on these acquisitions that the Zillows and the iBuyers have been doing, and seeing that they're kind of buying them for above market value, and us knowing that they're going to go in and sink some money, it was easy to start writing that off as, hey, they're willing to take some money losses as a loss leader to consume market share. And this is just kind of a confirmation that if that was their intention, they overshot the mark a little bit.
Right. Yeah. It was a bit of a turf war, right? Like, you know, it was like, so Zillow was willing to pay more so that their competition didn't get the opportunity to make that money or buy that asset that was there. And so the intent that we believe was, you know, be aggressive, go out there, take away these opportunities from our competition so that eventually they dry up and go away. Well, ultimately it backfired on them, right? That thing just turned right around on them. And now they're the ones that are out of the business, leaving, you know, a hole for other iBuyers to move into. But I think your point was valid earlier, Rox, that you know, there won't ever be a substitute for having local on the ground knowledge of the market, the area, how to price a house appropriately, things like busy roads or high tension lines. How is that going to affect a pricing? That kind of stuff can't be programmed into an algorithm, right?
It just can't. You're right. Let alone studying trends. The computer can give you trend lines, but knowing what those trends mean is about watching the cycles in a local market over and over and over again. And at the end of the day, with as much as the technology has been and will continue to change our industry, there's got to be a human being doing the final analysis if you're going to get the best outcome.
A local expert, right? That person needs to be in that general area, right? I can't be an expert in California or Indiana or, you know, some of those sorts of places. My my knowledge of the Denver real estate market isn't going to translate well to those areas. And so there's just no substitution for a professional that's in the area, that's actually working in the industry and in the you know, the area that you're looking to sell or buy.
Half 500 million. How many units are we talking about here, Keith?
So I've seen some conflicting reports out there. Somewhere between 7,000 and 9,000 houses, you know, Zillow had on their books basically as the owner when they made this announcement. So they had already completed the process. It may be something that's already out active on the market or under contract, but they were currently the records of owner between 7,000 and 9,000. They also had a backlog of properties that they had entered into an agreement on with sellers that said, hey, we'll buy this. And that was over 8,000, so about 8,200 that they're currently in the process of acquiring. So somewhere between 15 and 17,000 houses they're going to have to liquidate somehow.
Wow. So is that good news? Does that mean we're going to see some more houses come on the market?
Yeah, you would hope. But the big problem also is you've got these institutional investors out there that are also looking to pick it up. I mean, rental rates have been skyrocketing. They continue to climb. So it's an attractive investment for a lot of people that are out there. And that includes these massive hedge funds and institutional investors. So there was a report that I saw yesterday that came out that Zillow had come to an agreement with a New York-based firm and that they were selling a bulk of 2,000 units to them. So it's across 20 markets, 2,000 houses, and that's gone. So how many of that 17,000?
See this further restrict the inventory.
Right. So how many of that 17,000 that they own or will own are actually going to come out to the market for the general public is yet to be seen. I think, you know, for Zillow, they're kind of taking a page out of what they were offering to the home sellers. And they're going for the convenience factor of it. Hey, if I can go to one buyer and sell 2,000 units at a clip, that's going to be a lot less money, workforce, you know, costs, that kind of stuff than selling them onesie twosie in the general market. So
very interesting. Wow.
Yeah. And an unfortunate other side effect of this shutdown is Zillow also announced that 25% of their workforce is going to get laid off. So it's just affects a lot of people that were hoping to sell to Zillow, people that you know, were working for Zillow as their livelihood. There's going to be some ripple effects across a few different industries.
Yeah. Well, this is very interesting, and we will, I'm sure, be updating more on this, like we've been saying a lot in the past several months. Our crystal ball is a little foggy these days because it's like we keep on swimming into waters that we can't see what's under us. There's so many new factors. So, you know, we can do all the projections we want. It's going to be very interesting to see what this does. That's a huge shakeup in the industry.
Yeah, absolutely. And to be, you know, continued, I guess, is basically what we're saying here is we'll continue to follow it, track it, see what comes from this, and see if it does actually bring some extra inventory to our market.
Wouldn't that be nice?
Yeah, that would be a huge relief. But as of right now, it seems like they're at least exploring this opportunity first, and then maybe with the scraps that are left over will fall into the market for us.
All right. Well, thanks again for joining us. Hit that subscribe button if you like our conversations, and then go over on there and ring the ding bell, and so that you get some additional material as it comes up, notifications. And of course, you can share this with other folks. Thank you again for joining us on The Honest Hour.
See you next week.